Good morning, America. So the market is about to open in another 3 minutes. Uh, yesterday we saw yesterday we saw a bullish rebound, but after that it was taken up out by the bears on a bad market earnings. So we see here a tricky situation unfolding in the markets. Just to give you a glimpse, we are up about 23% from our initial capital, including the 3% which we made yesterday during the live session. And yeah, so so far the Apple has given us a very disappointing data plus deep seek. So that has basically the new AI tools done by the Chinese. Uh, it has basically got the market for the 8 days straight plus the Trump tariffs. Yeah, looking at this buying here and then the retracement, the most likely outcome is on the upside. But let's see, let the market decide. One of the things that you learn into the market is basically you are hunting for deals, you are hunting for trades. You are not basically just purely here to always looking to execute trade when there isn't any. So yeah, the market will be open in about a minute and we'll see. I think much of the bad news has already been absorbed yesterday and I think day before that. So any point in time, I think the market will start recovering if there is not any further bad news into the market. We know Apple dropped down 2.1% yesterday, and Dow was down approximately 69 points. Yeah, market is open, and we are going to see the first print in the markets. We'll first let the market settle. Hmm. Now the first print in the market. Market is volatile for the day. I think still dealing with the negativity that was done yesterday because of the tech earnings and then the whole AI outlook. But yeah, let's see where the market finds its bottom today. It's quite unsettling. Hmm. So, first 5 minutes bar is fairly long bearish bar. We are not yet short the market because it's quite premature to short it because um, we have seen like market bouncing back from its lows. So it will be a trap if you would just go and short the market, and it's very primitive state right now. So there goes the first print. I bought the market. Be cautious a bit. So that's, I think, that is the first. I think yesterday we closed at, that was our last trade, ended up at 2000 euros, 5190 euros. Today it is 2130. So why am I not shorting the market here? Is basically because the market has uh, showed all the negativity for the past 2 days. I mean, like we had tariff news coming in, and then we had quite unsettling uh, deep seek. So all the negative news is already digested into the market, and now you see. I mean, like the previous, these are the guys who are coming out. You see that could have been the chance where the bulls would have lost control, but today we just only see a two-third of the first retracement. I mean, like the fair side would be to bet on the upside in such a scenario like this. And as a, I mean, like as a, I have spent quite a long time into these markets. I know that you know you need to trade if you are making day trading for a living. Then basically you need to be looking after uh, what is the broader trend of the day, what is the most likely outcome. Like you deal in terms of probabilities. Like so yesterday was like around a 3% gain. Not every day you look for such gains, but we are really hoping now the markets will start doing well. So this was the first trade of the day, and we'll see. We'll continue to hunt. Trading is, so I have zero open position right now. I just took the scalp here, and I'm just waiting. Why? Somebody was yesterday asking why am I not trailing or putting a trailing stop loss into the mix. So the answer is like it basically comes down to your scenario analysis of what you are doing in the markets. Like what is the scenario today? If I want to stay long or not, and especially when this is a data driven market, you see these spikes happening all around. So you need a firm foundation of liquidity where there are buyers at every selling point. So you would like to wait. And as somebody had beautifully said, one of the market wizards had said that you need, first thing that you need to cover is you cover your ass in the market. Is like rule number one, never lose money. Rule number two, just in case, follow rule number one. And I trade to make money, not to be basically, thinking of how long or what a macho man am I in the market. I don't play the hero in the market, you know. So, and one of the trading strategies that we'll be learning here as a learner is basically learning how to trade for a living and also to build the right kind of mindset to do that. As you could see, the level of volatility, every price is getting rejected, but the market is not going down. No, it's taking. I mean, like, you see these big hanging mans. You see this. So you want to buy at bottoms somewhere here, but you don't want to be necessarily hanging along in this scenario. So if you would just see like how difficult it is for an like a newbie to make money in this market, because this is fairly not trending. On a smaller scale, if you'll see, the market is quite a bit, I mean, like, people would say flat, though it is heading towards bullishness, but it's still quite in its amateur state, and nothing can be said right now because for the 8 straight days, I mean, like, if you look at the market, the 8 straight days, if you see 1, 2, 3, 4, 5, 6, 7, 8, 9, for the 9 straight days, this is the range, and it is fairly the on the negative side. So rule number one is to be cautious, you know, and during those, I mean, like, when you really laser it down to a 2 minute chart or a 5 minute chart, is basically you'll get the trades here going on, but you would like to save some profits. So that is what we do. We hunt trades, not necessarily. Now, this is something of a spike that you're watching, but yet it's in its primitive state, like you see, 8 minutes straight going. So, one of the things that you learn as a professional trader is to basically buy the market at the bottom, not somewhere in between. Most of the amateurs will get in somewhere here that I told you yesterday. Now, no matter how much this stretch will go, no professional trader will get in here. Always remember, the ones that will get in will be here, but never here. And safety of the your profits comes first, rather than playing the macho with the market, because we already know the market had breached 540 levels yesterday, and this is what we are seeing, another uncharted territory today. So yeah, I mean, like, you have to just wait and watch and let the market first make your way. There has to be a trend for it to settle down. No, market always gives confirmation. You see the spike, you should see, this is really unsettling. So when you see these kinds of profits, uh, I mean, like, it's in other currencies it would be like too much, but just to give you a glimpse that this is years and years of experience. This does not happen in a day. And the flip side can be true also when you are handling that kind of fund size. So you really need to be careful when you are navigating these markets, uh, especially in a political condition like this. If you just want to see what's happening on a lower time frame, you can just shift down to a 15 minutes chart. The market is open for the past 15 minutes, and here we see an indecision candle being formed up on a 15 minutes chart. Until unless it breaks up, then okay, the market is trying to set up a trend here. But otherwise, it's fairly indecisiveness. There is no downside, no upside. The market is just balancing itself up. So these are the things that you need to think about before entering a trade. So coming back to the topic, like, everybody talks about an technical analysis, fundamental analysis, and other stuff in the market. But what I really would like to also focus on is the psychology part. I mean, like, you need to have right mindset for making money. You know, a lot of these people, they come into the market and they try to trade the market even when there is nothing happening. There is not though there is no trade. They are essentially addicted to just gambling their money away. So that is one thing that you need to be. watching out for. Uh, so you would really want the market to settle in, like you would not want it to be just basically going. You see the kind of indecision that the market is making. It's on a deeper time frame. If you want to see, you would see this. This is bulls in controls forever. Now the another candle is bears in control forever. That is known as the typical sideways market. And the other thing is that when you once you make a profit, you need to learn to keep it. Greed, fear, these are the two dominating emotions of the market. A lot of the stop losses would be hit just because of the market is really unsettling right now. What is ultimately going to happen? What is like as a trader or as a person who is handling the funds, what I've seen is that your job is to really deal in terms of probability and try to be the best predictor of the outcome. What we see is like we are expecting some bullishness to come back into the markets, but this is really unsafe for you to enter here. These two candles, if you see, if you are trading and you want to live, like you want to make money off living on your trades, I mean, like you have to be careful, and like it's like you have to be a surgeon to basically make money out of these things. So I mean, like you, somebody would just jump off and see, okay, these are two candles which are like the bears came down here and the bulls fought back. And the market is nothing but a tug of war between the bulls and the bears. If you just see bulls, bears, bulls, bears, bulls, bears. So it's always, you know, that this is a war that is happening. And why it is unsettling? If you come here and see at a day chart, this was the buying, but there was a lot of negativity. So the market is yet digesting all the other negativity here. So what you are watching is just the market trying to digest. But for the past, I mean, like I'll have to see the first 15 minutes bar. Market is fairly undecisive, and it is these kinds of markets that you need to be aware of. That you really don't want to get into any side of it, wrong side of it, because it's a sideways market. And a sideways market is like neither the bulls nor the bears, nobody seem to be in control. See, the first 15 minutes time frame tells us this very clearly. So what would you want to do is basically just wait for it to settle and then probably take a trade. So as I promised you yesterday also that we are not only going to be watching live trading, but we are also going to learn about this. So this is not going to be a type of a session where you are just coming and no nothing is being given to you, because if I am sitting here printing all the money and you are just watching, it's not going to help you in any way. So I'm going to be also teaching you about the chart patterns and the candles, about what is going on. So meanwhile, we can learn about like how do you analyze a day's trend. So basically, you see, like on your left hand side, you see a trend forming, like it's fairly a sideways. like drop, bulls fighting back, and then there was like here the bulls could have lost control, but they gained it back. Here we see because of the Apple and the other tech companies' results. So fundamental mixed with your technical. That's what we promised yesterday. There are three elements to it. One is your fundamental, the other is technical, the third is your psychology. So that is what you see here. It go on an hourly chart. Market is trying to fight back, get back into the shape. Then you come down to 15 minutes. What's happening on a smaller time frame? It's the same indecisiveness, but on a bulls are weak here. There's no push. This is one of the strongest bar that we see. One. But then here, weak, weak, weak. There's 3 weeks candle. And then at the open. So your job as a trader is to basically look for deals, not to just go randomly and punch it. You see? One, two, three, four, five. Five rejections. So far the bulls have not been able to take out this high from where it was rejected. And as we speak, it did. It did. Then there was this volume. Again, it's finding it hard. So if you see the day chart, you would like for it to somewhere cross around 580, and then if it goes above 580, then you see a lot of bullishness coming back into the market. So we're watching. See, the market is weak, but eventually, the market will has a higher chances of regaining that level. Until and unless it does that, what most of the traders where they lose money is in between this indecisiveness. Most of the people like to see trades. Like somebody might have just watched a trade. Hi, I'll punch on the buy side. No, you don't do that. Oh, somebody said buy now. No worries. People learn. So I've been in this market, fairly longer than the this COVID batch, because a lot of people they started trading in the COVID markets, and that's how it has become a thing. But I was here long before it was cool, and intend to stay here long after a lot of people might have gambled their money have gone out. So now I get into it as a business. I get into it when it is sure shot. I get into it when it's precise. I don't leave my money to chance. I don't mind if it sometimes I lose out because it is not coming on my radar. But whatever I execute it to the best of my ability. If we see some levels forming, then only we buy. Just like we bought here. Exact. So it rallied a bit. Right now, this is a lot of choppy market, guys. So I mean, like, as you will start to sit down with us every day, you will learn to know that market is not always trending. There is an approach to trade the sideways market also that we did is basically you look at the bottom, you buy it, and then you let it go. Like that's what happens. You see, the bulls have fought hard for such a long time. That's why I never entered this territory. That's the logic of not buying. So there has to be a conviction. I mean, like it's like your daily business activity. Suppose somebody comes to you and says, "Hey, I have this brilliant buying offer. Do you want to invest into my business?" Yes, of course. I would like to see some outcomes. I mean, like you invest in some venture, you would like to see your books. Is it promising? Is it going to take me up or not? So here we have the Bears winning. It has taken out what? One, two, three, four, five, six. Six to that. 12 minutes of trading was taken out within 2 minutes. So we see that the Bears are in a bit of control over here, but that does not mean that you go ahead and short the market. The market is still pretty much bullish at its core. So you have to be aware. Can't just simply go and short the market. You really need to look for it. Like so here are the two cardinal rules. You don't short a bull market and you don't buy a bear market. You always go with the trend. And I still believe that until and unless the previous this particular low or this is not broken, it's not a bearish trend till then. So whatever we'll be doing, no matter what, we won't be shorting the market. So you might have heard it said, trend is your friend, So be careful. It could be tempting at times. Just look at these bars and just try and short the market. Don't do that. So this is yet not the completion of the bearishness. How do you see is like basically you see the two-thirds of the bar. If this would take this up, then you can think about it. But clearly this candle is finding it hard to do that. You see the pretty much flatness in the market right now. It is not holding. See, today also there is a data coming in, but I don't think so that's going to be much significant. It's the ISM services PMI. So there's a data in another 4 minutes. Now, the best thing about the US market is there is always data coming in half of the time. Soon, I think so. Within this month, you'll have the privilege of watching the FOMC live. Now, all those guys who bought here are right now sitting down and thinking, hoping and praying that the market would go up. They are right now praying that it should go up. But what they failed to realize was that this is an indecisive market, and the only place where you can win is either you find a bottom to buy and get out, or you try to short it. But short is not the play. I mean, like you can play the macho in the market, but then really you need to be very careful if you're thinking about shorting the market. So this is the point where market last time rallied, took some liquidity. But I guess, let's see. Probably this time 404. I don't know. 'Do I really feel like getting in? Yes, I feel like getting in. But still being cautious. 1 minute for the data to come out. Hmm. That's the data, by the way. That's the data doing the spikes. So what do you have? The forecast was 54.3. The actual is 52.8. Hmm. So could be pump. So the market was waiting for the data to come out, and then now we are going to wait as we did yesterday for it to settle. I think a lot of people just saw the spike. Yes, if you really want to see it on a bigger time frame, two candles, indecisive. The third one made a spike, came back down. There, everybody. So this is what I was talking about. The third piece of the puzzle is your psychology, the greed. All of you who tried jumping in here, oh, the market runs. It does that every now and then. People just want to get in. Hope. thinking just one more time. Probably I'll make some money here. Now finally the data is out. We'll see. It is not nice for the people who have just bought and looking at the spike. It's a classic pump and dump. Oh shit. Sometimes I think uh, crocodiles are the best traders. You should go and watch them in a river. They sit quietly near the streams of water and let the fishes pass through their mouth. You know, and when the opportunity comes, they grab. So that's pretty much it, like in a life of a trader or life of a fund manager. We sit down with our guns like a sniper and we wait for the target to come so that at the right time we can attack. So I wanted to buy this candle, but then I saw at the data. I said, okay, let the market settle, and this is what happened. You see, so much of the times when you are uncertain about the data, you see, now who all wanted to buy? They were like in the commenting, why aren't you buying? There goes you buying, boss, right up to the. One of the things at the, no is because of this all technological advancement is like people think that they possess all this knowledge, like, and you should be humble enough to like listen to the people who have been in this industry for a while. I mean, like, if you knew all the answers, you would be obviously, sitting in front of the screen and right now talking like us. I mean, like, we also don't know the answer much of the time. Sometimes we also take a hit. So you have to be really cautious. If somebody would want to go for a scalp, then yes, we can go for a upside scalp, but it's okay. I just take a pie. I just took a pie out of it because I knew really when this kind of a selling has come, this kind of buying would also come. So this is known as short covering. So we did how much? It's 1890 euros. That's actually how much today? It's 2130, 1890. So yeah, so this was just a scalp. Why the term scalpel came into existence is basically you must have seen the surgeons. They take out their blade that is known as scalpel, and they use it to just scrape some of the things. So I mean, like here, technically. So what is happening is what happens in short selling. What is the logic here? So the guy has basically borrowed share. He does not owns it, and he has sold the borrowed share here. So definitely he'll cover it up here. He'll buy it back and give it to the securities dealer. So hence this short covering would take place. Now, if I want to scalp and make 1,000 or 2,000 euros in it, yeah, sure, why not? and plus it is overstretched. This size of a bar is basically you're dumping it. So when you're dumping it, you will buy it quickly back. So yeah, as we learn every day, we'll come to know. So that was the second trade in a row, which was decent, successful. So why do I mean, like, the logic why I'm being a buyer today is because the market is still in its state of bullishness. It has not broken, at least below this. So I think I'll call it a day today and we'll meet tomorrow because I don't want these sessions of ours to be also um, quite lengthy and boring for you guys. So, yeah, see you tomorrow at the same time. Today we made 2130 and 1890. So that's approximately your 4,000. Yeah, approximately 4,000 euros. Yeah. So we'll see how the market conditions are tomorrow and let's learn together and trade together. All right. Have a good night, good day in whatever part of the world you are. See you later tomorrow. Bye.